Hello and welcome. I'm Patrick Curtis, your host and chief monkey, and this is the Wall Street Oasis podcast. Join me as I talk to some of the community's most successful and inspirational members to gain valuable insight into different career paths and life in general. Let's get to it. In this episode, Andy shares his path from NYU Stern to the stressful summer analyst internship recruiting process. We learn how he ended up at UBS, what happened when his group, Power and Utilities, got dissolved, his strategic decision to join the energy group, and how he leveraged his time in banking to land a very interesting corporate development and strategy role that allows him to dabble in the public and private markets, as well as growth equity and venture. Enjoy. Andy, welcome to the Wall Street Oasis podcast.
Good to be here. Thanks for having me.
It'd be awesome if you could just give the listeners a short summary of your bio.
Yeah, so my name is Andy. I graduated from NYU Stern in 2017. I majored in finance and mathematics, and coming out of college, went to UBS, investment banking. I was in the Power and Utilities group for about a year and a half, and then for about half a year in the New York energy team. And then after that, transitioned to a corporate development and strategy role at Standard Industries. And I've been here so far for about a year and a half.
Awesome. And how should we think about Standard Industries, like family office, doing PE, doing what type of investments?
Yeah, the explanation sort of changes depending on who I talk to every time. But I guess for the audience here, I feel like Standard Industries would be more of a family office. And so my role, it's called corporate development and strategy, but it's really a catch-all. We work on sort of investing across the wide swath of things, public markets, private markets, and typical PE style. But also a lot of the work is just traditional strategy and corporate development. So thinking about the portfolio companies and, what we can add on to create synergies.
Awesome. Okay, so let's start all the way back at NYU or even before, like when you went to NYU, were you thinking, you went to Stern, so you basically knew I'm going finance. So were you in high school thinking IB, or when did you know you wanted to go that path?
So surprisingly, I went into Stern with a pretty open mind. I'd heard of IB a couple of times through high school, but I didn't really pay it much attention. Coming to Stern, it definitely is sort of thrust upon you that, IB and finance is, the career path, is the job to go for. But I sort of went in with a more open mind. I sort of looked at marketing for a little bit, went to some actuarial science clubs, and then took a good look at accounting as well. But I guess just the resources that Stern offers and the community was sort of very centered around finance. And so I slowly gravitated towards that as the years went on.
And did you feel like you needed to know early? Because you only graduated 4 years ago. Did you, at that point, was the accelerated recruiting happening? Was it, I know Stern is huge feeder, right? So is it super cutthroat competitive? Tell me a little bit about because everyone's always target schools have it easy. You're in New York, you have a huge advantage, but tell me about just what it's like actually in terms of the competition. Obviously the competition is much better too.
Right. I'll phrase it this way. I think if you go to NYU Stern and you have just some sort of strong interest in investment banking or finance in general, you will find a job and you will find a good one. And so with that in mind, this is sort of just hindsight 2020 speaking here, but I think back then it felt super cutthroat competitive. I think when junior year rolled around, we still had the luxury, class of 2017, we still had the luxury of more or less regular recruiting. It was kind of junior year. I think
early, right?
Junior fall, I think you kind of start thinking about it, and then through the winter and then junior spring for that junior summer, that's when
that's pretty late
interviews. So it wasn't actually too accelerated when we recruited. There were definitely some events sophomore summer, I remember, here and there, but nothing like it is today, which is literally sophomore fall. You're looking at not the following summer, but the next summer. Yeah, when we did it, it felt not as accelerated, but it still felt competitive. But now looking back, I think everybody who wanted to be in the industry sort of ended up finding their way there just because by virtue of being in New York City and going to NYU Stern.
Yeah, it's a huge advantage, even if you're not at a target school in New York.
Yeah.
Tell me a little bit about, so what about your background a little more? So are you from Toronto? Because I see,
yeah,
I'd love to
Toronto, Canada.
Yeah. So tell me a little bit about, your family. Were they ever into finance or marketing, or kind of why Stern, and was it, you don't have to give me a whole spiel. You don't have to give me your essay. Like, you can tell us the truth. It's just a good place to help you land a job at a school is fine. But like, what was the thought process,
So, interestingly enough, my parents are very academic folk. My dad, they immigrated here from China, maybe 20, 30 years ago, and they came here for school. My dad got his PhD in mathematics at University of Alberta, and my mom did her master's in computer science. And so they were very academic folk. They raised me to sort of be very academic. Hopefully their dream, I guess, become a professor or, get a higher than a bachelor degree and just be very academic in that sense. My dad actually, surprisingly enough, transitioned out of academia into finance. So he did a lot of risk and risk management for a lot of the banks and financial firms in Toronto, doing modeling, but not our kind of modeling, but actual
risk modeling, statistical modeling and stuff like that.
Yeah, so a lot of deep in code, deep in all these different kind of math software. And that was kind of like my first little peek into the financial world. I remember just meeting up with him in high school for lunch or whatever, and had to walk through these tunnels in Toronto that run underneath all the banks, and you just kind of see everybody buttoned up and suited up walking around. And I thought that was kind of cool. And I was like, these people look so important. I wonder what they're up to. And that sort of, I guess, subconsciously kind of poked me towards business school. And that's kind of how I ended up at Stern, I guess.
Sounds fair. Okay. So you're kind of coming, let's go fast forward again to junior year. You're coming in, you're thinking at this point, you're kind of getting swept up in the whole IB recruiting. Like, you have a couple friends doing it, and then you're like, oh, I'll drop my resume. So what did you end up doing kind of your freshman and sophomore summers?
So freshman year, one of my dad's good friends, he worked at Manulife, and he was, and he ran the risk department there. And so, through him, and I had met with him, spoken to him a few times, and he had an opening there, and I applied, went through the process, and ended up going through that process and ending up in Manulife. And that was kind of like a quantitative analyst kind of position, where I was doing a lot of coding to kind of automate a lot of processes that they were working on.
As an intern, it's pretty good. Or were you doing it during the year?
Yeah, from a risk standpoint. Yeah. And it was a great experience because I was deep in code and kind of trying to figure out how code and finance and financial processes kind of connected.
What were you coding in?
VBA mostly.
VBA.
So it was a lot of just like Excel driven kind of automation.
That's awesome. And that's great experience for an intern. It's a freshman internship.
Yeah. So I was deep in VBA for about 3 months. And then that gave me kind of my first foray into what quantitative finance could look like. Obviously, they don't do like Excel automation, but it was kind of like a good Python. Taste of that.
Yeah.
Right. Exactly.
Yeah.
And so the following summer, sophomore summer, I was actually studying abroad the semester before, so sophomore spring. And so it was kind of stressful looking around for a job from abroad.
Where were you?
I was in Prague, Czech Republic.
Oh, awesome.
And so I remember the spring too. We went with a bunch of Stern kids too. And around that time, like getting close to the summer, like April, May, everybody was like, oh, I need an internship. And everybody was in our like dorm lounge in the middle of Prague, just like trying to look for jobs and interviewing. But I ended up finding a asset management role, Arden Asset Management. They actually got bought by Aberdeen Okay. But I think formerly known as Arden, and they were a fund of funds. So they invested their money in other hedge funds and other fund managers. And so it was interesting just to get exposure then to the broad hedge fund and institutional investor landscape, because that's, they were judging like fund performance and looking at different fund strategies, and it was kind of cool just to get a good landscape of.
Yeah, it's kind of a good internship to have if you're curious about hedge funds, because you do get that broader view. You're not doing like the trades, the fundamental analysis, obviously, but like which is also interesting. But you're kind of able to get a really macro view, right?
And it was pretty cool because some of the data you get to work with are the performance, like quarterly performance of all the funds that they look at. And it's kind of cool to see, like these funds are doing so well. Oh, this fund's doing really well. You kind of see that all.
That's so cool. What was the best fund? Not no names, but what was the best returns you saw, if you remember? This is back in. This would be back in what, 2016, 17?
Yeah, 16.
Yeah.
I don't remember what the numbers were, but all the
annualized returns funds, of like 30% or higher.
All the quant funds were killing it. Yeah. The quant funds were just killing the game. That's all I remember. Looking at those guys is just insane.
So did that didn't kind of attract you? You didn't think, hey, I want to be a quant and go to work at quant?
Yeah, I mean, I thought about that, and then I thought about, and it was good that I had my freshman summer internship.
Yeah,
and I feel like
you thought about sitting in code all day, and you're like,
yeah, exactly. Yeah, exactly. I did major in I did major in mathematics, and I always loved computer science and mathematics, physics, all that stuff. But I felt like part of me really enjoyed looking at things from more of an eagle's eye perspective. And so looking at things from a bigger picture and not being stuck in details the whole time.
Yep.
That's kind of what I felt like freshman summer, where, there's a point where I was so deep in code and I kind of, everything becomes abstract. And you kind of forget about what you're actually doing for this company. And you're just like, I'm just trying to solve this puzzle for the day.
Mm-hmm. Interesting. So obviously you had a super high GPA because you graduated summa cum laude, but so your GPA was an issue. So you probably got a ton of interviews. What was the conversion rate from resume drops to interviews, first round interviews at the banks for you? Was it like 10 out of 10? Was it?
So
9 out of 10?
I'll be frank here. I always feel like the recruiting process is very different school to school. And it's really hard to tell a student from another school how to approach the recruiting strategy, especially if they're a bigger school where there's a dedicated recruiting team from the bank. If you're out in a non-target where there isn't a dedicated recruiting team for you, I think that story is a lot more generalized and you can follow a set strategy. But for NYU specifically, there were NYU specific recruiting teams for every bank. Yeah. And so the strategy was a little different. And I'd initially thought that, high GPA is really important. Some finance internships be super important. Oddly enough, my success with the initial stages of interviewing was not that great. And it was a huge eye-opener because I realized that, investment banking isn't a terribly technical.
I was going to say position. they may have been a little bit hesitant about your resume, seeing all the technical stuff, thinking this guy's going to be like a robot or a computer nerd or whatever, a mathematics guy. Like he's going to get so bored writing pitch decks. We don't want this guy, right? That could be the thought.
Like, exactly. And that I feel like that was sort of the thought. And partly my mental frame was not correct either, because I came in thinking that, okay, technical skills, finance experience, I should be set. But I didn't really think about the interpersonal and the social component of it, which I did not realize was that huge at investment banks. And so the networking component, and not just scheduling the chats and going to them and, spending 20, 30 minutes talking to some guy or girl and then checking it off your checklist. It's about going to these chats with the intention of creating a relationship and developing a relationship with that person, and trying to get to know them, get to know their experiences, and essentially get them to like you as a person. but obviously not go in with that expectation, but just to go in thinking that, I just want to meet a new person and learn about, what this bank is like.
Yeah, that's a good
and now
frame.
looking back.
Yeah, what were you doing? You were just going in, checking it off the list.
Exactly.
Yeah.
Right. Because, this really was the first kind of real job or internship that you would get. It's kind of the internship that's converted to a full-time offer. So they think about you as a full-time employee. So this is kind of like your first real job application. Mm-hmm. And it was a great learning experience because, again, I didn't know how big the interpersonal and just not being weird and just being sociable and being likable.
Did you feel like you were a little weird still coming in your junior year, a little awkward?
Yeah, for sure.
You don't come across it now. I mean, so whatever you've done, it's worked.
I mean, years of just interacting with people in offices, I guess 3-4 years of being in an office.
Why do you think that? I mean, so yeah, I agree with you 100%. I mean, I think a lot of people underestimate that behavior portion, especially the questions like, tell me about a weakness, tell me about a time you struggle with the team, tell me about a time when you led a team. Those kind of open-ended questions where oftentimes you see the people who are more engineers / mathematical types approach the answers as very formulaic, and you can almost see them just reciting their story, but it's there's no feeling, right? They're not building a connection with the person across from them, so it's less of a conversation, more like, this question I answered this way, this question I answered that way. Exactly. And it's almost like a formula, and you can feel it almost in the conversation rather than it flowing more naturally. I don't know. Is that accurate? Is that what you were doing? Yeah, for sure. I think I think the wealth of resources that are out there, and obviously, the Wall Street Oasis has so many great guides and great pointers that, help candidates through this. But I also feel like it's a double-edged sword if you don't interpret it correctly, in that, they're guides. They're not instructions. They're the first step for you to develop your own thoughts and your own kind of answers, unique answers to each interview question that might come to you. They're not instructions saying, this is the framework to answer this question. I hear the STAR framework all the time, and, people misinterpret that now to be like, okay, I have to walk through my answer STAR and just like give that answer like that. And it's really easy to tell. Obviously, from the candidate's perspective, you think you're doing it correctly, but from the interviewer's perspective, it's really easy to tell that you just followed some framework and cookie cutter answer. So, it's interesting. It's interesting how to balance that, because a lot of these, well then what do I do? And I think it's more about really as much reading about body language, facial expressions. Developing those skills where you have high enough EQ to know whether what you're saying is resonating. And to say what you're saying with confidence and like a level of genuine delivery that is hard to do in an interview setting. But if you can do it, you really, really have a much better shot at making that connection and impressing someone. So it's what I always say. It's hard to teach. It really comes with reps, but you can teach it. I truly believe that, because I know from my own experience, you get better. Your delivery gets better. It's like an actor, right? It's like when you first try to deliver your lines, it's not going to come across very naturally. And then once you get used to it, I always say it's better not to memorize word for word what you're going to say, but have kind of ideas you want to hit. But anyways, was that your experience? Were you striking out? Like when you said it, you kind of were surprised at how you didn't do well. Like, what do you mean by that? Like the number of interviews you got, or just your first rounds? Yeah. So I think when recruiting started, it started with sort of a lot of on-campus events. I think a lot of the banks sent their recruiting teams to Stern, and there are a lot of these lunch events where 5 or 6 of these guys and girls will go up on stage, give their experiences, and then after the presentation's over, a swarm of like 100 kids just descends upon them, and then you have all these like little circles, and these guys get overwhelmed, and you try to get their business card. It was just a complete disaster to try to navigate. And so I realized slowly that, you can't just blankly put in your resume anymore. I think
especially coming out of NYU Stern, where I think the standard for students is generally pretty high when you're viewing, Stern kids from an interviewer's perspective. But also there are a lot of these relationships that are developed between grades. The business fraternities, just good friends that, they graduate, they're 2 years, a year above you, they graduate. And so, or they're a year above you, they've done their internship already, and now they're a senior and they know people that they can connect you with. And so it's a very kind of relationship web kind of driven process.
Yeah, totally.
And I slowly started to realize that when, a couple of friends and people I knew started getting interviews, but, the interviews haven't started yet. So I was just kind of like, what's going on? And so at that point it started to click.
I don't know the right people.
Yeah, crap. I need to start networking. I need to start doing all these chats. I need to start like reaching out to people I know. And I was probably a little late to that game. And then
because the added stress, it's junior year at this point.
Right, exactly. And the added stress with the added so the stress of being late to the game, and also the added social frictions that I had personally, where I was kind of like a little more awkward as a kid at that time. Made it a difficult kind of interviewing experience. Definitely.
Yeah. And so you noticed there were some like almost earlier interviews around before the official process. You're saying what's going on. Were you part of a business frat?
I was a part of an honor society. It was kind of similar, more or less. Yeah.
Did they have a lot of alum in banks? A lot of alums?
Yeah.
So that helped a little bit, probably, right?
That helped me get into UBS. That was okay. That was it. Yeah.
Okay. So word to the wise, get into these clubs, because then you meet the people who are a year or 2 years ahead of you. Freshman, sophomore year, and those connections are the ones that can help pull you up, right?
Yeah.
Or at least get you the first round interview.
Yeah.
So tell me, on the first round interview, did you only have a handful then of first round interviews at banks, or tell me how those went? Do you remember like rough numbers, like from first round to second round to super day, or however it worked?
So it was very staggered, I remember. So it wasn't like all these banks started interviewing at the same time.
So was UBS late or early?
UBS was kind of in the middle of the pack.
Okay.
And I was already sort of late to the process, but I had a few close friends who were at UBS, and they sort of helped me get that first round. And so I just busted through the UBS round really quickly and then just took it, because I was like, I am done with this process. This is just too stressful. But yeah.
Okay. So you went through the process, and had you done any other first round interviews at other banks before then? Do you remember if you had landed?
Not really. I had one kind of like pseudo. It wasn't really like a first round. It was kind of strange because it felt like an interview, but it was more. It was supposed to be a coffee chat, but it kind of felt like an interview because they brought me into the office.
Yeah.
I sat in an office next to all the bankers, and then one by one, like
it was an
3
interview.
or 4 bankers came in and just talked to me for 20 minutes, and they all felt like interviews.
What was that? What was that bank? Do you remember?
Bank of America.
It was Bank of America. Okay.
Yeah.
So you kind of had a pseudo interview, not knowing it was an interview at BofA. You didn't make it past that because you probably didn't even realize it was an interview.
I was caught so off guard.
Yeah. and then basically, well, that's kind of a good tip. If you think you're going for a coffee chat in an office, be ready for an interview.
Yeah. Basically.
So you had some friends help you get the first round converted to a summer, right? And then tell me, kind of, you accepted right off the bat, so you stopped interviewing, you stopped the whole process because it was a nightmare.
Yeah, basically. I mean, there were a few banks, I think BAML and Credit Suisse, that I had interest in, and so I like pinged a guy I knew there and a guy I knew at BAML, and was like, hey, look, I got an offer from UBS. Like, are you guys still running a process? Is space open? Obviously you tell CS, like CS is my first choice. You tell BAML, BAML's my first choice. See what happens. But they had already closed their process, so
okay.
I'm just like, okay, fair enough.
Yeah. Okay. So you get there in the summer, and what is it like? Is it a blast because they're whining and dining you? Are you working 100-hour weeks? What was it like?
So
I know it's going to be fun with a large bank because you have a large group, right? Of summer analysts. Tell me what that was like.
So my banking experience was very atypical. For one, my group was very small. It was maybe 15 to 20 people. Mm-hmm. Power Utilities was a pretty small group within UBS. And for one, my summer experience was a lot more difficult, both from a workload and hours wise perspective, and just generally just navigating a corporate environment than when it was joining full time. I think for a lot of people.
How many hours were you doing in the summer? Do you think 80, 90? Was it over 100 hours?
No,
a week?
it wasn't 80 or 100. I think it was
70, 80. It
was like 9 to 10 or 11 every night, maybe occasional midnight. So it wasn't like
no weekends or
maybe every other weekend during the summer.
Okay.
So
yeah, but
so I guess maybe 70, 80.
Not too bad.
Yeah, it wasn't too bad, but
you felt it was tough because of the corporate stuff and the politics and all that.
Yeah, the politics, and everybody's trying to get this full-time offer, and every single mistake that's caught just like sends your head into a complete swirl. And so that part.
Do you remember your first mistake?
Oh yeah. I remember we were running this sale process that didn't end up being such a successful process, and we only got I remember we only got one bid, and so our standard set of materials was like summary of bids, and I used this template that said summary of bids, but there's only one bid in there. And I remember one of the associates got pretty frustrated that I left off the plural on the cover. And, now looking back, I'm like, that was, like it was nothing to freak out over. Yeah. But I remember back when I was an intern, I was like, oh crap.
Like I just lost my full-time offer.
Yeah. I was like, this is bad.
Summary of bids. Here's one bid.
Yeah. So it should have been summary of bids.
Was this supposed to go to the client? Did it go? Did it go to the client with saying summary of bids and it was only one bid?
No.
They caught it. Okay.
Yeah, they caught it before it went out to the client. But
yeah, that would have been on them.
Okay. Yeah, I remember that vividly. I was so stressed that day.
So okay, there was that. Any other kind of like model? They didn't let you touch the model, or were you doing mostly pitch work or PowerPoint work?
I did remember poking through a model, but I don't think there was any kind of modeling work where my work was actually kind of relied upon.
Yeah. So then tell me a little bit about how the summer progressed when you found out you actually had the offer, the full-time offer. Was it stressful leading right up to it? Was it like there a midsummer review being like, hey, you're not cutting it, or you're fine?
Yeah, I think midsummer review, it was fine. I remember I got pretty positive feedback, and then going into final reviews, it got super stressful because our team actually, the intern talent in our team was really, really good.
Oh no! How many other interns? 2 others or 3 others?
There were 6 interns.
Oh, there's a lot.
3 were from NYU Stern, and they're both friends of mine, and they both knew they were super smart and super capable people. Mm-hmm. And I remember they said they were limited to maybe three or so offers, and so I was like, okay.
They're not going to take all 3 from Stern, you're thinking, right? And
right. Yeah, they're not going to take all 3 from Stern. And there's also this other guy who was just an amazing, amazing guy. Like he was very likable, very sociable, and everybody in the group really enjoyed having him around. So I was just looking at that like, oh crap, like maybe I have incrementally better work than him, but like I'm obviously not as likable as this guy. Like I'm getting really worried here. Yeah. And so it got to the point where like the summer internship goes from like sort of fun during the summer and a good experience to kind of getting close to the end of the summer. People peel off to like meet every individual member of the team, just to like get to know people. And then you see people walking in out of the office to grab coffees, and you see people in interns in people's offices, and you're just like, oh my God, like this is starting to get very stressful, very political. And like,
did you do that? Did you start doing that?
Yeah. I mean, our friend who had gone the three of us into the group, he recommended like, you should meet everybody in the group and, grab coffee with every single person at least once, just so they know who you are if you don't work with them.
Right.
And so, yeah, we were just doing that all day long.
And so going into those kind of what are almost like informal interviews where you're not supposed to be interviewing, but you have to just hang around and have a coffee with somebody.
Yeah.
How are you approaching those? Because that can be stressful in and of itself, because you're thinking, if this person ends up not liking me in this 15-minute conversation or half-hour conversation, whatever, then that could hurt my slim chances. Because it sounded like you were in a pretty precarious spot with a lot of sharp interns around you. So tell me about that. How did you go about thinking about it?
Yeah, I thought a bit.
Were you better than like, were you still very regimented of like, I'm going to ask this before going in, or did you let it flow?
I think I loosened up over the summer. I started to, I think after that recruiting experience, I started to learn that, not everything's formulaic. You kind of just have to go with the flow and just, don't go into any conversation with any expectation. You just go out and talk to people, get to know who they are. Started to kind of learn that. And so I think I had some decent success near the end of the summer, like getting to know people on a personal level and getting to know their experiences and their thoughts about banking and the whole experience. And so I think that helped me a bit, but I like to think that, and so in the end, the three of us, the three Stern kids, got the return offers.
No way.
And so I like to think that maybe like just me loosening up helped with that a bit, but
you were probably not going to get it. You were probably not going to get it until you kind of made that push at the end, I'm guessing.
Yeah. Yeah, for sure.
Because I'm sure there was a lot of like, we can't take all three from Stern. We should really take that other guy. Maybe that was really likable.
Yeah.
Yeah.
And the diversity cards were just not stacked in our favor. We're three Asians too.
So yeah, you had that against you too.
It was just like, nothing's going to work here.
Yeah. So that's surprising. That's surprising that you made the cut, especially with the other two friends that were sharp.
Yeah.
So congrats on that. So, okay. So you get the offer. Tell me a little bit about like just the relief and then how did you just have a blast senior year and then party the entire time?
Yeah, basically, senior, it was a great time senior year. It was very relaxed. You didn't really have to worry about anything. And, I just took a bunch of classes that I had a lot of interest in and, traveled a lot. So
where'd you go?
Yeah. The winter I went to Iceland.
Awesome.
And then spring break, everybody, our grade, it's a kind of like a Stern pseudo tradition. We all go to Cancun senior year.
Nice. Okay.
Yeah.
Nice.
Yeah.
And so tell me a little bit about just how things shifted when you went full time. It sounds like it almost got easier going full time.
Oh yeah. You were
with two friends too. You were two friends.
Right. So one of my friends actually lateraled to another bank.
Oh, okay.
And I learned after that she was concerned, same as me, that she wouldn't get the offer. And so she had been looking for a lateral opportunity.
She had been talking and protecting herself or whatever.
Yeah, in case this didn't work out.
Why hadn't you been doing that?
Well, I have, but I wasn't getting any bites either. So okay. I was just like, I need this, and so it just added on to that stress. But
okay.
So it was just the two of us. And
so when you say you were looking for a lateral position, sorry to interrupt, were you doing like LinkedIn stuff? Like that's the type of stuff you were doing, like reaching out?
I was reaching out to the guys that I knew when I was recruiting junior year. They're just friends of mine. And so I was just poking around there being like, hey, like, do you think there'll be any full-time positions open? Like,
and this is everywhere. This is BAM, Credit Suisse, but also everywhere else too.
Yeah. Yeah. Just anybody that I knew. Because I felt like that was
any elite boutiques that you looked at or anything like that? like a Molus Evercore type role?
Not really. I don't really know anybody.
They don't recruit
there.
as heavily at Stern, I don't think. Yeah.
Yeah. Because I always felt like, at least at the time, that a full-time lateral from an internship was definitely more relationship driven. Like it was never really about any formal processes.
Right.
And so I was just focused on, people and people that I knew.
Yeah. Okay. That's fair. So sorry. So you're kind of coming into full time. How is this different now? You start that first month, there's training, obviously.
Yeah. First month there's training. I was going in ready for probably an incrementally more difficult experience. And, initially it was that, but I think gradually, power utilities started to experience some difficulties within UBS.
Mm-hmm.
I think UBS at the time was trying to shift their strategy away from, balance sheets and lending, and trying to become more of like that elite boutique model where we just do advisory.
Yeah.
And so
pure advisory. Yep.
Right. And so if you know anything about power, that whole entire industry is about lending.
It's all
about your balance sheet. Yeah. Like if your bank can't put up debt capital, like nobody's going to talk to you. Mm-hmm. And so the group kind of inherently conflicted with the entire bank strategy. And so gradually, power needed to shift their strategy as well. And so I think a lot of our business opportunities and deal opportunities were lost because of that balance sheet culling. And we started to focus on these other opportunities, other deals. And obviously deal flow kind of waned a little bit. Slowed down. And so my full-time experience was a lot less cumbersome, and a lot less, hours
any worked. Live deal? Did you close live deals while you were there?
So I got super lucky because the group was in a stage where like live deals were
few and far between. Yeah.
Few and far between. Yeah. We actually closed the Wheelabrator Technologies, which was sold to Macquarie Infrastructure Partners, and it's a waste to energy plant. Okay. So it's kind of like a hybrid power industrials deal, which was actually super cool to work on. Site visits were kind of weird because the place was super smelly, but but it was just a great deal to work on, and it was super interesting to learn about something I never heard about before.
Cool. And so as you're kind of coming up into you're finishing up year one and going up into year two, what are you thinking about? Because you're there for a couple of years. Is everyone chattering about like private equity? What's the feeling of the analysts, and what was the was it writing on the wall? Was it obvious that there wasn't as much deal flow? I mean, you're not working the 100-hour weeks, right?
Yeah. No, I think near the so my 2 years are kind of interesting. I think a year in, we were approached by the bank that power and utilities would cease to exist. And so, that obviously brought up a whole ton of stress as well. It's like, oh crap, like
you're going to get cut completely.
Yeah. Like we're a year out of college. I'm going to lose my job. Like, oh my God. But then, UBS was pretty good in that they said like, nobody here is going to lose their job. Like we're going to reassign people because there's a lot of bright talent in this team, a lot of smart people, and we need you guys. And so they kind of split everybody up. And so we were technically power utilities infrastructure. We had a pretty strong infrastructure practice. And so infrastructure, it became infrastructure, which moved to leverage finance.
Got it.
And then where I went with, I think 3 other guys, we went to energy, which was based in Houston, but New York had kind of like a little satellite operation.
Yep.
And so that's what happened to power utilities ultimately.
So your second year, you were kind of more energy. You're in energy, basically.
Yeah, and I was transitioning energy. It's similar in some ways to power, but in other ways, it was a completely different industry. And you just had to learn about oil exploration and midstream pipelines, all that stuff.
Different modeling, right?
Yeah, completely different.
So tell me, what about so power is more like the actual utility, like the power utility companies, like the large companies, whereas energy is more like the actual drilling and the oil and the.
Yeah, it's like it's like you can think of power as more downstream. It's kind of like converting that oil into power.
Got it. Okay.
Yeah.
So tell me a little bit about just, so you're super stressed again a year in, you end up figuring out, okay, I'm not going to lose my job. I'm going to this other group. But you're now in a kind of a satellite office where the main headquarters. What was it like working? I mean, at least you're in New York. Wait, did you start interviewing right away? Or had you been talking and networking to people?
Right.
It doesn't sound like you're networking very aggressively throughout this whole thing. I mean, both in the latter, were you talking to like a couple people a week?
Oh yeah. So I think, so I had a couple friends who were a year or two older, and they gave me a lot of good advice where they said, the year you join, so you join in like August, which was the fall you join, you should start talking to headhunters and start developing that relationship, because they send you stuff, and you think investment banking recruiting is early, private equity recruiting is even earlier.
Yeah.
And so they were telling me in the fall, you got to meet these headhunters. They're your path into, what comes after banking if you choose to leave. And so I started meeting all these headhunters that fall. And, you'd get email opportunities in your inbox, like every day. And just start kind of any opportunities that are interesting to you.
So what did interest you?
So I was initially super interested in private equity, mainly because I was really fascinated by just learning about more nitty gritty operations of a business. I think the one benefit, and I wouldn't say the one benefit, I think it ended up working out really well. The fact that deal flow wasn't really crazy was I could have more depth than breadth when it came to learning about companies and learning about the deals I was on. And so I was super immersed in Wheelabrator when I worked on it. I got to really learn about, how they run their plants. Each individual plan, I could remember what they looked like, and
you knew the numbers like back of your hand.
Yeah. What went in, what went out, how many people were staffed there, what they were getting paid, what the management structure was like. You get really detailed in that aspect. And so I think if I were at another bank or another group where, you're working on like 3 live deals at the same time, you wouldn't be able to get that breadth, and you're just kind of cranking out deals.
Or you'd have to, for your interviews, you'd have to at least focus on a few and really drill down and study.
Yeah.
You had that naturally, like you already just knew it. It was similar to me because I was in restructuring, and I had, those engagements stretch out so long, but what happens is because you're working on it for so long, you literally know like 40 different capital structure scenarios, and like you've run like the model 1,000 times. So every single number, like I could rattle off everything. So it helps in the interviews, right? So tell me what happened. Like, so you're at UBS, you're coming from power and then energy. Did that hurt you? Were they only giving you like energy or type funds, or what was the kind of, I don't know, the conversion to more middle market PE? You're coming from UBS in a group that's a little less traditional. You're not doing M&A,
right?
So tell me about that.
Yeah, I was worried about that because I think initially, I think the bank told us, you can have your pick of the groups. I think most of the groups were always welcome to more analysts. I think one guy went to healthcare, one guy went to consumer. And I was thinking about industrials because the UBS industrials practice is super strong. They do a lot of deals. But I also thought about, if I'm going to be spending my time like recruiting and, looking at the ideal next opportunity for me. And
you chose energy.
Right. Yeah. And my wish was just to have more depth in sort of the deals that I do instead of just cranking out like deal after deal. That's a
really interesting approach. I don't know if I would, looking back, I wouldn't know if I would recommend that, because there is a little bit of like the reputation.
Pigeonholing.
Well, there's the pigeonholing with the energy, but there's also reputation. Like industrials is known there because they do a lot of good deals. And I think there's probably funds that recognize that a little bit more.
Right.
But you make a very good point on the other side of like, but the depth you had of the deals you did is so good that when you do get in that interview room, you just completely just like wipe the floor.
Yeah. Yeah.
So tell me about that. Yeah. Tell me about that.
Right. So my thought process was, if I wanted to join big PE and if I loved cranking out deals and I loved, the deal process and just from open to close, completing transactions, I think I definitely would have gone to industrials because that's the best place to get that experience. But for me, I was super interested in like just nitty gritty stuff. I wanted to be involved in a model, like to as detailed of a degree as possible.
You should have done restructuring it like that.
Yeah, I work with a guy who used to come from restructuring too, and seems like that would have been a great place to be too.
Yeah. Go ahead. Sorry.
And I knew that energy was sort of similar to power utilities, which is like a lot of the modeling isn't done by the M&A team or the left fin team. It's all done in house. Like all the templates from all the product groups run through the coverage group for energy and for power utilities. So I knew, okay, great, I would be able to actually do some detailed work.
That's good.
Understand stuff really to a really detailed degree. And because the opportunities I were looking for were, it was PE initially because, that was the kind of the only place you'd get this kind of operating exposure. But I think being in energy and I saw standard industries pop up, I didn't really know what the role was, but going through that process, I started to learn more and more that like, wow, this is kind of exactly what I was looking for.
And so tell me a little bit about how you even evaluate like a family office type role, a hybrid type role, where there's maybe less structure. And not that middle market funds have that much structure. I mean, oftentimes they're only hiring a few associates a year. So tell me a little bit about how was this like a one-off where they're hiring just one associate, one analyst, or is it something where there's a program where you felt like there was more structure there?
So there's definitely less structure as standard industry. So it's kind of like an analyst is hired every 2 years, which is kind of like when they need a guy every 2 years. And I think initially it's such a nuanced role and kind of difficult to explain that in the early stages of the interview process, I just treated it as like, this is just either practice or I just have to like go through the process and just see what happens. But slowly you go through the process and you start to learn more about the company, what the day-to-day is like. And I started to realize this is a lot more of a investing role than for example, like a hedge fund role or a private equity role or a corporate strategy role. It was kind of just an investing role in general, which means
you were doing private equity, but you had the opportunity to do private equity type deals, but you were also doing public market stuff. Is that what you mean by investing in general? It was like it was an umbrella investing role rather than you have to invest in this specific type of.
Right. And it was kind of like my first foray into learning about family offices. And basically what it is you just have this giant pool of capital that's just completely flexible. You can do whatever you want with it. And so some of the discussions that, I heard people having were just super cool to listen to and evaluate because, they look at opportunity like, okay, we can buy some shares, or we can maybe buy a huge chunk of shares and, maybe be able to talk to the management of this public company and, help them grow, help them make some decisions, or we can take them private, treat this like a PE style deal, and then we own it. Or we can search in the private markets, or if we don't like the public equity, maybe we can get into the debt. Or if the company's too early stage, we can put in some VC capital. It was just like every single thing under the sun was on the table. And it was just super cool to see. And that kind of aligned with more of what my interests were, which I realized in the end, there's a lot of like private equity is a super cool and exciting role to be in. But there is a little bit of inflexibility to the extent where like
the types of deals and the types of companies.
Types of deals.
Yeah. So tell me a little bit about that though. Like, isn't there still some in a family office? There's so like they always say, right? If you know one family office, you know one. So obviously it depends. How did you get comfort that was actually true? Because a lot of them may say that, and then you get there, they're like, no, we're only doing these types of deals right now. Like the the family, whatever, whoever the head honcho is, the family, or the head of whatever they call it, the PM or whatever, they only want to do, debt deals or only mez deals right now in this specific industry. So how did you get comfort that there really was that open mandate before going?
So
because it sounds amazing, right? It sounds interesting. So tell me how.
To be honest, you can never really know until you actually join. But I took a leap of faith in that aspect. But I think what
were they selling you on that? Were they selling you on it a little bit?
Yeah, I think what sort of informed that was basically everybody in the team just telling me, we get to work on a lot of different interesting things. Like sometimes the CEOs will, send some ad hoc opportunities about something just completely unrelated. Like it could be, I don't know, like could be a food company, could be like a company that, makes leather bags. And it's like a friend of theirs that, sends an opportunity across and they just have to take a quick look at it. So that kind of started to get me interested. And then, kind of look at the website, you look at, what the Standard Industries vision is, which I always say it's a family office to explain to finance folk what exactly it is. Mm-hmm. But the fact of the matter is they're not trying to be a family office. Mm-hmm. We're trying to be more of just a modern industrial company. Mm-hmm. So anything that's aligned with that vision of bringing industry to the modern age, mm-hmm. focused on, construction, is in the wheelhouse. And so naturally, when you look at modern, you look at a lot of like venture capital and growth equity kind of investments. And so they had a venture capital practice that they were growing. Mm-hmm. And so just seeing that and, seeing that this was
how many investment professionals are in under, if you can share that with Standard? I think on your kind of similar role to you or senior to you.
Yeah. How many in the venture
total?
fund?
In total under Standard. Yeah.
A handful. It's like 8 or 9. 8 or 9.
Yeah. Yeah. So it's not tiny.
Yeah.
And so you guys are basically the 8 or 9 of you are responsible for like evaluating every investment potential that comes through or coming up with your own ideas.
Yeah, just mostly just evaluating stuff that comes through, but also, when there are gaps in between deals or projects, start to be proactive and look for stuff.
Very cool. Can we go back and talk a little bit about pay? I mean, I know for banking, it's pretty standard. I think a couple of years ago, what were you making, like 85 base or something like that, or 90 base or?
Yeah, 85.
And then bonus first year, was it good or you were just happy to have your job and it wasn't so good? Because your group did kind of dissolve.
I think first year you get a stub. I think it was like.
Oh, they give you a stub. So you start in the summer. And then
because it was an annual cycle. So you start the summer, you get a stub. I think it was like 25. And then, mm-hmm. and then I think the next year, I think you get a bump to, I forget, it was like 89 or something. Oh, you get a little bump to 89 or 90. Mm-hmm. And then the first year, the bonus was actually, I was surprised. It was like pretty decent. Mm-hmm. I think it was like 70, 75.
Wow. That's amazing.
Which wasn't too bad. Yeah. And then the next year you get
all in, you're getting like 160 almost.
Yeah.
That year. And that's your first full year, I guess, there.
Yeah.
Yeah.
And then you get a bump to, I think, 92. Mm-hmm. And what really bummed me out was I joined Standard Industries the summer
before
the third year. So I kind of lost half a year bonus, but it is what it is.
And then was it a big pay jump going to Standard in terms of, or was it just more of a jump in terms of lifestyle? Although it doesn't sound like you were getting killed at UB. And whatever you're comfortable sharing, you don't have to give a lot of details. Like it can be a range or whatever, but was it around the same, around the,
It's pretty standard, like private equity, what it would be. And I kind of like a bigger private equity fund, which is, for.
Oh, that's really good.
Yeah. Which is for
like
any analyst.
Like a mega fund or an upper middle market fund. They're paying you that?
Like upper middle, I'd say.
That's amazing.
Which is for any investment banking. Yeah. For any investment banking analyst going to like upper middle market mega fund kind of paycheck is like crazy.
That's amazing. And it sounds like, I'm guessing that you're not working 80-hour weeks or 90-hour weeks.
Yeah.
70-ish?
Yeah, for sure.
60 to 70?
I think so. So oddly enough, I end up working more hours than I do when I was in energy, but the day starts a lot earlier because of the public market component.
Interesting.
So, in banking, you roll in at like 9:30, maybe 10 if you're feeling like it. We start the day at like 8. And so I'm doing like 8 to 6 mostly on an average day. And so you compared to what I was doing in energy, it was about the same, if not a little bit more.
So how much of are you basically are you responsible for the public market component of like just you, or you and one other person out of the 8 or 9 investing professionals? Or is it like, are you grouped like that in terms of public market focus versus this? How should I think about that?
So
not to get specific about your company, I'm just trying to understand like what a role like this involves. Right. Like are you all of a sudden like for 3 months involved in like just trading? Are you like, doing not day trading, but are you trading out of positions within like a month or a couple of weeks, like doing that type of stuff? Or are you more like, hey, these I'm looking at like a 3-month view, 2-year view?
So our team, the corporate development strategy team, is very vertical. Mm-hmm. And so I'm the only analyst and the most junior guy in my position at this moment.
Okay.
And so anything under the sun that needs a little bit more horsepower in terms of analysis, I'll work on. Mm-hmm. And so to give you an example, like there will be days where I'll flip from one public market position we're working on 1 hour and then flip to some PE process we're in right now for the next few hours, come back to that public markets thing, and then maybe like read a couple messages on some and help do some like research work on some venture thing. Yeah. Like it'll be literally everything under the sun. But
it's kind of cool.
I think the one unifying concept is that, we're focused industry wise on construction materials, like building products. And so that's, if it wasn't that, it'd be kind of like too crazy to keep track of. But yeah.
And so tell me a little bit about just how this during COVID it's a pretty small team. So I assume you guys are just doing video chats all day or most throughout the day, kind of connecting with one another, or is there like a Slack channel you're using, or how do you stay in touch with the team?
Yeah, we're on a Google Suite, so it's just a lot of Google Meets. Yeah.
Got it. Cool. Well, any other kind of words of wisdom? I mean, it sounds like you're in an awesome seat. Kind of, are you thinking business school down the road, or what's the thought process eventually, or even just stay on because it's fun to move on up?
Yeah, I think for the time being, stay on, move on up. Business school is always in the back of the mind, but I'm actually kind of interested to see where the whole education space is going, like post COVID, because I think that's an interesting transition to look at.
Yeah.
And
they're all coming online to Wall Street Oasis.
Yeah.
They're getting their financial modeling training, everything. A little pitch there at the end there for that.
Yeah, exactly. It'd be super interesting to see. I mean, like all these online education services are gonna might see a lot more, business and growth.
Yeah, we're seeing it this year. I mean, it's been a big year for us, the record year for us in terms of traffic and in terms of sales to the courses, new students. So it's exciting. It's kind of, it'll be interesting to see how things kind of transition once vaccine. I mean, I think for a few months people are just gonna be like partying and traveling and taking long deserved vacations. And then where things will settle will be interesting. I agree with you. Any other words of wisdom to share with the listeners before we call it, from your path or from just in general, from your friends that you've seen?
Yeah, I guess, and it's always easier to say looking backwards, but I think for anybody, getting super stressed out about, banking recruiting, getting super stressed out about, for example, PE, buy-side recruiting, I think in the end, if you have the motivation, if you have the work ethic, and if you have, the mentors to help guide you along the way, it all ends up working out, I think. Mm-hmm. Whether or not initially you think it did, whether or not initially you think you made a poor decision or whatever, I think the humans are incredibly adaptable, and we learn to adapt to what we're given, and in the end, it all works out, and we all end up to some degree enjoying what we're doing.
I think it's a
So it
great,
works out.
yeah, it's a great words of wisdom, because I think a lot of people, they look in the moment, they think so short sighted. Like when they get that rejection, or they are in a seat that's really tough, they think, this is, why am I doing this? And they have a lot of the existential crises you see with it. And I get it. I was there, breaking down and like, when am I going to get out of this? And like, how am I going to get out? And a lot of it's hard to pick your head up and kind of see further out. When I got fired from my first private equity gig, I got fired within like 3 or 4 months, and I was like
Oh, wow.
out of the job for like 3 or 4 months. You'd think that like oh my gosh, my career is just completely derailed, and it almost was. I mean, it was a pretty bad situation. But I ended up landing on my feet at another PE shop in New York, and then that started WSO, probably because of that whole experience. So now look,
Right.
So it's like, in that sense, I think it's important to just try to keep the long-term view and not feel like all is lost. And I think there needs to be more hope, and people need to be patient with themselves, because really it's all about grit and work ethic. You can really get to almost an incredible, I won't say anywhere, but an incredible level, because cheesy and not true. You can get to an incredible level of success measured by any kind of normal standard in this country, just through hard work, and determination. I really believe that. Especially if you work on not just the technical skills, especially if you work on getting more likable, especially if you work on the stuff that you may downplay and think is stupid. Hopefully with maturity and age, you realize that relationships do matter a lot. So thank you for all that wisdom. It was great.
Thanks for having me, Pat.
And thanks to you, my listeners at Wall Street Oasis. If you have any suggestions whatsoever, please don't hesitate to send them my way, Patrick at wallstreetoasis.com. Until next time.